is live. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. It's been a crazy week so far. Not so much in the stock market, although today was really kind of wild, right? I mean, we saw a flat open, and then things have really taken off. I'm looking at right now at the overall indexes. The S&P is now green. It's up 6 points. It was down around 20 points or so. And the Dow is now up 231 points. It was flat on the morning. So another good morning there. But the NASDAQ has been all over the place. It was down really early in the morning, about 80-ish points, maybe a little bit more than that, then turned green, turned red again, and it's trying to fight its way back into the green as we get into the close. We've got about 15 minutes to get there. We'll see if it happens. But we also have oil that's actually taken a huge dive. It actually turned green, turned red, and then and just continued to fall red. It's down 3.5%. It's down $3 per barrel. So WTI crude sitting at $86. Bodes well for your gas tank. Another couple of interesting things here was that Bitcoin is now down below 24,000. But last I checked, and let me just double check this as well. Some of the shit coins, I guess most people would call these, such as Doge, is up 10%. I correct myself. It's up 11. It was up as much as 14 this morning when the market opened. And I thought this was very interesting. We're not seeing the, I guess, more well-known or such as Bitcoin, Ethereum, that sort of thing, doing well today, but somehow Shiba and Dogecoin are. So very interesting dynamic there with cryptocurrency. But guys, we have some really good topics to talk about, to discuss this afternoon. I'm really looking forward to it. We heard from Walmart and we heard from Home Depot this morning. Then now tomorrow we'll be hearing from Zim. I know a lot of you guys like that one, so we'll chat about that a little bit. And maybe some of you can help me understand a little bit more of the allure to Zim, because I see the growth there and I see the chart and it looks okay. But some of you, the conversations I've heard from some of you have you're super bullish on. So just trying to figure out why. So we'll talk about Zim, Target, and Lowe's also report tomorrow. So I'm going to give you my thoughts, my opinions on that. And then there's also Krispy Kreme, which I know it sounds funny, but it could be a nice little sleeper for tomorrow's earnings pre-market. So we're going to talk about that. I'll give you a little preview as what I think tomorrow's earnings are going to look like. And then, of course, shit or legit. Before we get into any of that, though, let me hit everybody up with the starting five. We got Bodie Beard in the house. Appreciate you tuning in first, my man. We got Tiger's Edge, Kevin Hawthorne, Philip Stroh, and, of course, the one and only Jeff Ponica. Thanks for tuning in first. You guys are our starting five. If you missed the starting five, it could be because you haven't subscribed or hit that notification bell to get notified when I go live at 3:45 p.m. Eastern time, Monday through Thursday. So if you guys want to get into that starting five, make sure you do all that stuff. As you walk into the door, I certainly would appreciate a thumbs up as well. And let's get started on today. So just chiming in, I see a lot of you guys chiming in. Yeah, see Hector already talking about Zim, and yeah, we're gonna chat about it. I'm definitely looking forward to hearing what some of you guys are. What is so attractive about Zim? Even Savvy Money Show, who is a tenured regular on the channel and invests regularly as well. So. Snooker says, what another great day. Congratulations to all of our winners. Man, freaking nuts. Yeah, no kidding. I also want to, and Don, I see Don Fran from the Don Fran show. Don, listen, man, we got a new morning show. And when I mean these guys. Got a new morning show. I'm actually going to bring that up. So it's still in its very early stages, but I want to invite you guys to come check it out. If you are interested in learning about cryptocurrency in general, Bitcoin, how to even buy cryptocurrency, where to store it, or even just have me cover the morning's news, right? So much happens overnight, and I think that it's important to have a morning and afternoon show, but it has a different home. It's called Decentralized TV. I'm going to put this in the chat as soon as I pull this up. And Don, the reason I thought about you is because I think it'd be cool if you came and hung out one time in there, and maybe we can have you in the mornings as well. I know your schedule is a little crazy too, but we'll get you there. Here it is. I'm going to put the link in here, and so you guys can check out Decentralized TV. And And it's not just me. It's a group of us from the Medify fam. Peter Saddington may join. We go live every day, Monday through Thursday. No, I'm sorry. I think it might be Monday through Friday. It's Monday through Friday. Correct myself. 9 a.m. to 10 a.m. So I'll be live 9 a.m. to 10 a.m. Eastern time, just before the market opens. We can see the market react and react to the market open whenever, if anything changes there. And then we go over various topics, news related to cryptocurrency, as well as traditional investing. So it's a little bit of everything. So if you guys are interested in checking that out and help me support another new venture that I have going on, go check out DCTV. I'm actually, did I pin that? I think I did pin it, but let me just, yeah, it's pinned. Okay, cool. So go check it out. If you guys are curious about what we have going on there, we're building another show. So I think it's going to be a lot of fun, and it's multiple personalities. Obviously, I'm pretty, I would say just a novice when it comes to cryptocurrency. So this is actually a journey that I'm walking myself through as well. So little shameless plug on DCTV. Would love to have you guys hang out in the morning. I believe this morning we had about 8 people tuning in live. We need to do better than that. So humble beginnings. I'm looking forward to, though. Oh, perfect, Don. Cool. I'll send you the link. So Don's going to be there on Friday as well. That'll be a lot of fun. Okay, so let's get into it. So Walmart, let's pull up Walmart's chart. Actually did pretty well. And we kind of talked about this, right? We kind of knew that Walmart was, I don't want to say kind of knew. I had high expectations for Walmart just because there was such a terrible earnings report last time around. If you guys recall, we talked about a little bit about this yesterday, about this terrible drop off. Walmart had tanked, had its worst 2 days that it's had in nearly 36 years, 35 years. 1987 was the worst last time Walmart had fallen this bad on some pretty poor earnings and, more importantly, poor guidance. This time around, they actually changed it up. They had a pretty decent quarter, beat on top and bottom line. Retailer reported a total U.S. comparable sales rose 6% in Q2 to top consensus estimates for a 6.2% increase. Transactions were up 1% and an average ticket rose 5.5%. Comparable sales rose 9.5% at Sam's Club locations in the U.S. Off transaction growth of 9.8%. They came in and consolidated gross profit rate declined 132 basis points, but they actually gave a pretty decent outlook. This CEO is quoted as saying the actions we've taken to improve inventory levels, which is what we talked about. The inventory when it comes to discretionary versus non-discretionary and getting a hold of what the consumer's actually doing was going to be key. And it looks like they actually pulled through this quarter. So just to continue, along with a heavier mix of sales and grocery put pressure on profit margins for Q2 and our outlook for the year. We made good progress throughout the quarter operationally to improve costs in our supply chain, and that work is ongoing. We continue to build on our strategy to expand our digital business, including the continued strength we see in international markets. So they raised their guidance somewhat. They see earnings per share dropping 9 to 10% for fiscal year 2023 to $5.74 to $5.88 from a prior view of $5.62 to $5.75. So even though we're seeing a drop in earnings per share, it's not as bad as what was expected. So that's the key. I know that it sounds weird to say this is good. Walmart, so let me just repeat this. Walmart sees earnings per share dropping 9 to 11% for fiscal year 23 to $5.74 to $5.88. The expectation was $5.62 to $5.75. So it's higher than what the expectation was, even though it is a drop from a year over year on earnings per share. So these earnings are guiding down, but they're not as bad as what people are expecting them to be. Does that make sense? We've been talking about this pretty much all earnings season in a I don't know, I don't want to say tongue in cheek, but I've mentioned this plenty of times where we're seeing these scenarios where it's so bad it's good. And I think Walmart just kind of is in that case where it has gotten so bad that now it's finally good. The expectation was far worse than what the reality is, and that's why the stock's actually moving up. Walmart came up 5%. And honestly, that's really kind of why the overall market's up today. Let's take a look at Home Depot that also reported earnings, and this was interesting. They came in, did pretty well on expectations, but the real key was that top line growth in 2Q bodes well for results from Lowe's. I thought that this was going to be interesting. To hear from Lowe's tomorrow. I'm going to give you my thoughts on that as well. But they did really really well, and one of the key things was that they saw an increase in inventory. Sometimes that would be a bad thing. So compared to 2019, Q2 inventory increased 77%, while sales increased 42%. And this implies the spread of inventory to sales has widened to 35% in Q2. This is from the CEO over at Home Depot. We don't see that these heightened inventory levels as problematic. We'll believe HD is buying inventory forward. So the reason that they have a little bit more inventory than sales right now seems to be because they are expecting stronger demand going into the end of the year. And that's not really much of a surprise. I don't think it is. And so I think that this is actually going to do pretty well moving forward. It's already up 4% today. And we go to the daily chart. It looks pretty damn good. Came up to the 200-day moving average, got rejected. We'll see what it does, in the coming days and weeks. But I would expect that we see move over that 200-day moving average. Maybe we see RSI cool off a little bit, but I like Home Depot from here. All is well, I think. It obviously has come down a ton from its $415 highs, sitting at 327 today. I think it certainly should be living over the 200-day moving average relatively shortly, and it could come on the heels of a Lowe's report. So Lowe's also up 3%. Getting rejected here at the 200-day moving average as well. They have earnings tomorrow, pre-market, and that stock's up over the last 52 weeks, I should say, 11%. Year to date, it's down 16%. So take that for what you will. The expectations here are that Lowe's comes in at $4.59 per share. Estimated revenue is going to be around $28.16 billion in revenue. And that's going to be interesting too. Can we see similar results from Lowe's that we saw from Home Depot? And some would say that this is a given, right? And that's why Lowe's is up. The expectation is that Lowe's is going to do well. So we might as well just buy it up on the same day that Home Depot reports, right? It's just the next day. There's always a case that you can make that Lowe's doesn't come in and do well. Or let's just say that Lowe's comes in and does it as expected, and that could also result in a sell-off. So Lowe's is going to have to knock it out of the park for this to increase tomorrow. So just keep that in mind. Just because Home Depot does well doesn't necessarily mean that Lowe's will do well too on the next day. But you see this all the time, right? And you see how there's this dynamic between even Target and Walmart, and we can take a look at Target as well. I think that Target could do better than Walmart. The stock is up 4.7%. We just saw that Walmart's up 5%. So these moves aren't all that surprising. You just have to understand that just because Walmart did well doesn't necessarily mean Target will. And Target's almost going to have to do better than Walmart in order for this momentum to keep going. What I will say is, we look at the forward PE of Target that's at 21 times next year's earnings, and we go back to Walmart to check that, and I believe it's significantly higher. I'm going to look like a real idiot if it's not. Yeah, it's up 25 times next year's earnings. So Walmart is actually more expensive fundamentally. Obviously, not as far off from its all-time high as Target as well. So I would venture to say that the upside to Target is a little bit more significant than a Walmart would be. So if Target does come in and do better on their earnings than even what everybody's expecting them to, then the stock could continue to do really well. We're still a ways off the 200-day moving average that sits at 203 with it about to close at $180 a share. So to me, I think that Target has a couple of things that they need to address. Last time around, the real big issue, and this was the issue for Walmart as well, was that they misread the consumer. And that resulted in an overabundance of discretionary items in their inventory. The longer that sits, the more money it costs. They need to rotate that stuff out of there. So that was the big problem. They did actually beat sales numbers. So how does that work? They had to deal with inflation, of course, energy, wages, shipping costs, all of that costs a lot of money. So that's why one big reason why they missed on earnings, but then actually beat on sales. But the only real reason they beat on sales, though, too, was because of non-discretionary items, things like clothes, food that people need every single day. That's why people look at Target, Walmart, and grocery stores as inflation proof or recession proof or resistant, I should say. And so now we look at these, and I think that if they can right the ship, if they can address this, which it seems as if Walmart is, I wouldn't be surprised if Target did the same. The market is officially closed. We'll talk about that in a second. But I think that Target should do well. I think they beat on earnings, and I think they beat revenue numbers, and I think we're going to hear about what's going on with back-to-school sales. Walmart talked about this a little bit, and I think that back-to-school sales is going to certainly help the guidance here. It's not going to help the quarter they're actually reporting on, of course, right? But, I'm looking at kids going back to school here in North Carolina already, which is just mind-blowing. And, it seems like they go back to school earlier and earlier. It's wild. But anyways, I think that back to school sales is certainly going to be a big boost for them, especially when it comes to guidance. And I don't think we're going to see that much demand destruction there. We'll see. I'm just not sold on that. So I think that Target should do well on their earnings tomorrow. It closed the day up 4.5%. Don't be surprised if it continues to go up. Obviously, as I'd mentioned in the beginning of all this, that just because Walmart does well doesn't always translate into Target doing well. But I think in this case, they will. And same thing for Lowe's. We have a couple other stocks that are going to be reporting tomorrow, and I'll get into those in just a second. But let me see what some of you guys are chatting about. John says calls or puts before the market closes on Target. Well, we're obviously a little bit too late on that. So I obviously I'm not going to tell you what to do, but I do feel like it's worth being bullish on Target tomorrow. Don says I tagged out Target today on that sell-off. I'm sure you mean the sell-off here. So let's pull it back up on the chart. Here's that 5-minute chart. So it looks like Don actually went long on Target. And you can see that it went all the way up to 183 towards the last half of the day around 2:15 Eastern time, and then sold off. So it looks like he ended up selling out of that and just took his money and ran. Housekeeping says my local Target has been packed. Bruce says 91 in here and only 33 likes. Yeah, there's actually over 114 people in here. So if you guys wouldn't mind hitting that thumbs up to help show support for the channel, I certainly would appreciate it. And let me just also invite everybody, as people have rolled in, to go check out DCTV. It's Decentralized TV. I have a morning show now, 9 to 10 a.m. Eastern time. I go live with some of my buddies who are now part of my crew. And we talk about decentralized finance, of course, and that involves Bitcoin, Ethereum, cryptocurrency in general. But we also bring in traditional finance as well. I talked today about Mark Cuban getting sued by Voyager, but then I also talked about how Chrysler is doing away with the Charger and the Challenger as we know it, which is pretty crazy to think about. The EV race is serious, guys. But those are some of the topics that we talked about this morning. Come join us tomorrow. And I certainly would appreciate you guys go checking out. The link is in the chat, so make sure you check that out. All right, so let me check in on a couple others. Don said Target had crazy sales. Stuff I've never seen on sale was 80% off. Right, that kind of just goes to what we were talking about as far as discretionary items that they just needed to get off the shelves because it was costing them money the longer it sat there. So that is definitely something worth noting. Okay. Hey, I appreciate that, Hector. Whip out with them like buttons for me. Appreciate that. It wasn't my house that burnt down, though. It wasn't the house that burnt down. It was actually our Bitcoin mining facility. The whole reason why I moved down here was to have a show in North Carolina and do it from our facility of thousands of Bitcoin miners. Fortunately, Nothing else was damaged other than the electrical system. And I say that tongue in cheek because that's going to cost a ton of money to get us back up and running. But in the meantime, I'm still going to be live. I'm in the condo that I'm at right now because I can't shoot from there. But we're making it work. And we have an incredible crew of guys here and gals that are helping me out, making sure that we're still streaming. So appreciate that, Hector. Thanks so much. Okay. Let's see here. So looking at the overall market as we're now officially closed, S&P closed up on the day 0.19%. So it's kind of like, I don't know. It was really volatile today. So it closed red. Dow or S&P ended up going green, came down red slightly again, and now ended up closing the day on flat. So if you looked at it this morning and then came back today without looking at it at all, you're like, oh, no big deal, just a regular old day. But it was pretty volatile. The Dow, though, was on fire, mainly because of Walmart, Target, Home Depot, some of those other ones. That was up 230 points. That's what it closed at. The NASDAQ actually closed slightly down on the day, also very volatile there for that index. And crude oil closed down 3.33%. So those are your numbers for the overall market. A couple other stocks that I wanted to talk about. And this is one, I just saw that somebody was asking about Zim, Z-I-M. They don't have, there he is. Yellen was asking about Zim. Zim doesn't have earnings today. The only reason that I put it on there today was because they report tomorrow before the market opens. So I wanted to just touch on it and give my thoughts and honestly get my some of my thoughts or some of your thoughts to me during today's stream, because I'm just not understanding why Zim is so attractive, other than the fact that it's a Wall Street bet stock. I mean, is that really all it is? And be honest, if that's what it is, then fine. Let's just call it for what it is and move on. Because the stock itself honestly hasn't done bad. It really hasn't. And I think it's probably going to take more than the Wall Street bets crowd to get it moving. I will say it's super cheap. Let's take a look at the chart right now. And I say that from a forward PE standpoint, it's only trading one time next year's earnings, so pretty much flat on forward PE. It's been struggling, obviously, because of shipping and supply chain issues and inflation, energy costs, oil costs, all that stuff has impacted the shipping industry by a ton. But we're seeing a little bit more of a resurgence, and we look no further than the transports. Union Pacific has started to make some pretty decent moves. You can see this one. So trains, planes, and automobiles is how I'm looking at this. So Union Pacific is doing really well. CSX had some pretty good earnings as well this earnings season, and that's doing pretty good from its bottom. Then we look at something like a JB Hunt, right? That had earnings and are crushing it right now. And these transports are absolutely on fire. So could we see a move in the shipping business as well? The expectations for Zim, Z-I-M, your preview here is that consensus is around $13.22. That it would be a 79% year-over-year increase. And consensus revenue estimate is set $3.7 billion. That's 55.5%. Over the last 3 months, earnings per share estimates have seen one upward revision, and recent earnings analysts from contributors seeking out contributors said that Zim integrated shipping will change everything. So what are they and what do they do? So if we can look into Zim a little bit more, they are container shipping and related services in Israel and internationally, so primarily there. Provides door-to-door and port-to-port transportation services for various types of customers, including end users, consolidators, and freight forwarders. The company also offers a ZI Monitor, a premium reefer cargo tracking service. As of December 31, 2021, it operated in a fleet of 118 vessels, which includes 110 container vessels and 8 vehicle transport vessels. So the growth is what really is kind of eye-popping. As noted, a huge increase in earnings per share. That would be 80%, and revenue up 55.5% year over year. That's during a time where we're seeing high inflation, high energy costs, and the like. So to me, it seems as if the bar is set awfully high, although we've seen a pretty decent correction from the highs on Zim. So $75 came all the way down to $41 and is flirting around with that 200-day moving average, just barely above the 50-day. Closed up today, not too crazy. So it doesn't look like we saw a mad dash of buyers coming in before tomorrow's earnings get released. But I definitely want to get some more thoughts on you guys. Yillen says, just to reiterate, that Zim's never missed its earnings. Nothing special about it, in my opinion. Hector says, isn't Zim the big three? Low PE, high dividend, high growing. What is the dividend yield? Let me just double check what the dividend yield is on this. I didn't even bother checking that. But if that's the case, that could be another big reason why. Obviously, valuation super low. Dividend yield, is this right? Forward dividend yield is 22%. That can't be right. I'll have to cross-reference that. But the dividend actually looks like it's pretty decent. Valuation, of course, super cheap. Profitability, of course, very good. 55% growth in revenue as well. So those are definitely attractive for Zim. 43.70. I don't know what this is. Yamit. But yeah. Housekeeping says, I like Builder's first choice over Zim, and I've been in Zim ever since last year, which, yeah, I mean, I guess that there's a lot of hype around it, but to me, I'm just trying to understand why. So the growth, of course, is certainly something to be excited about. And Hector brought up a good point. I just don't know. We'll see. I'm not going to give my thoughts on what we're going to actually see from Zim tomorrow. The one thing that I will say is that the bar seems to have been set pretty high, and obviously, if I'm not, if it's something that I don't understand, I'm not going to invest in it. And of course, you shouldn't do the same. But anyhow, Snooker says, "Oh, I see what you're saying. 43. Okay, I got you." Yamit. Yamit says dividend is 43.78% showing on my broker. Yeah, that's what the payout ratio is 46.767%. This is from Seeking Alpha. The dividend amount last time around was $2.85. So it's a pretty decent yield. Pretty decent yield. It's probably an understatement. But anyhow, this is something that I think is at least worth watching. I don't know if it's something that I don't actually be all that excited about, but hey, we'll see. What up, Peter Staddington in the house? What up, my man? I've just been promoting our DCTV in the mornings. So the link is pinned in the chat. If you guys want to go check that out, we'll be live again tomorrow, 9 to 10 a.m., going over everything crypto and traditional finance. We're bringing it together in the morning show. So love to have you guys in there. We're just kicking it off this week. So be graceful as we work through our growing pains. But now you get me in the morning and in the afternoon. So it's pretty awesome. And you get a bunch of my teammates, and we're gonna be crushing this thing. So me too, my man. Peter says, I wish I could bring you coffee. we had a good thing going. But okay. So a couple other things that we need to touch on. And this is one that I think that is a little bit of a sleeper, and you guys might laugh at this, but just hear me out. It's Krispy Kreme. And I just learned this today. But did anybody know that Krispy Kreme's headquarters is in Charlotte, North Carolina? I had no idea. That Krispy Kreme's headquarters was right here in Charlotte, North Carolina. But it is. So fun fact about Krispy Kreme. That's not why I brought it up today. But it was one of those things like, oh, it's right in my backyard. That's pretty cool. But yes, the ticker symbol is DNUT, which I don't know if this is like the best ticker. It's either hilarious or genius. And I kind of think it's genius, right? You always hear about how tickers, some companies will create these tickers so that you just don't forget about them. And nobody's ever going to forget about DNUT, right? Surprisingly enough, though, the stock's been hanging in there, all things considered. Forward PE is at 35 times next year's earnings. So that's a little bit on the high side, right? But the growth here is, I think, extraordinary. And they have some pretty decent pricing power. And the reason why I like this one is because of what Dutch Bros did. If you guys didn't catch Dutch Bros last time around, which was last week, we reacted to those as they were releasing their earnings last week and after hours. Dutch Bros accelerated their efforts to increase productivity in the middle of the company's P&L by taking a 3% price increase in Q2. They were able to pass on a lot of the inflation costs onto the customer and didn't see hardly any they didn't see any slowdown in revenue growth. And so I think that we could see something similar with a Krispy Kreme. So we didn't see any kind of wild hype move on the stock moving into tomorrow's earnings. It actually closed in the red slightly. It's had a pretty decent bounce from $12.33 and then spiked all the way to $15.65 just this week, just yesterday. I think that there's a lot to be said for this. It looks to be one that's just been flying under the radar, and that's why I said it could be sneaky good. I'm not going to sit here and say that this is a slam dunk guarantee, but just given that we've seen some pretty decent moves and pretty decent growth out of this specific area, with Dutch Bros being the most recent. Starbucks actually had a pretty decent quarter as well. I think Krispy Kreme, for a stock that hasn't been trading all that long publicly, actually could do pretty damn well. So, hey, it's one of those things where I think is one that could fly under the radar. Let me give you some of the expectations here for Krispy Kreme. I just had them up. Why did I lose them? Here we go. So estimated earnings per share is 10 cents. 10 cents per share, $385.94 million. I feel as if that is probably a pretty decent bar to jump over. We have a lot of analysts coming out and saying that it looks like a pretty decent buy. The only real knock on this is the valuation. The market cap on this is quite high. The forward PE, as I'd mentioned, is at 35 times next year's earnings. So that's going to be one that might turn some people off. But the growth story here, surprisingly enough, even though Krispy Kreme has been around for a while, is still very strong. We're seeing a lot of stores pop up in Vegas as well. So hey, we'll see. Let me. Some of you guys that are chiming in here says Snooker says I actually did. I've got fam in High Point, North Carolina. Oh, nice. I didn't. See, I didn't know. And everybody chiming in on the D's nuts jokes. I appreciate that. It wouldn't be on the chaos if we didn't have some sort of childish joke, which I am a full participant in. So please keep bringing them, people. Housekeeping says definitely suspect when they IPO, but they've been slowly improving themselves. Yeah, absolutely. Absolutely. So demand for donuts seems low to me. Maybe, says Darwin. But that we'll see. It seems as if we're seeing an increase in demand from Starbucks, Dutch Bros, that sort of thing. Obviously, Dutch Bros is in an entirely different growth phase. But, hey, these nuts is still growing, baby. Savvy Money Show says, I like Krispy Kreme and Wendy's. But I'm a fat bastard. All right, so Snooker says, when am I going to go to Panther games? Listen, I've seen enough of Baker Mayfield in the AFC North. I don't need to go see him now. I don't know. I guess I'll go to a couple Panthers games, but I still got my Ravens tickets. They're not going away, so I'm going to go to a couple Ravens games this year. Still going to Baltimore, baby. Okay. So those are the expectations for tomorrow. We do have TJX as well. I'll just cover that real quick. So this will be one to watch for, especially as retail continues to report going into next week. We're going to hear from Costco, a couple other ones. But TJX, it's been an interesting story for them. Estimated earnings per share for TJX is going to be around 67 cents, $12.05 billion in revenue. They came in and beat earnings per share last time around, but then also missed on revenue and lowered guidance, obviously citing a lot of things relating to inflation. So demand, although I think could be good. The growth here is good. They have great profitability. Momentum is certainly on its side now that it's closed over the 200-day moving average just this week. I think that there's a lot to like here. The only thing that I'm not all that keen on is the valuation. This says a forward PE of 20 times next year's earnings. So when you compare it to some of the other retailers, it is a little bit expensive. It's much more expensive than the S&P 500 overall. So that's the only knock on it. But TJX could come in with a decent quarter because, as we had mentioned before with Walmart Target, the back to school story is certainly still there. So I like this one. I just don't know if I would be. I think I would be one of those things where I could wait. I could wait for TJX before actually considering getting into this one. All right, ladies and gents, it's shit or legit time. If you want me to look at a particular stock that you're interested in and want me to determine whether or not I think it's shit or legit, put it in the chat. Would love to hear from you guys. Put SOL and the ticker in that chat, and I will react to it. It just might show up on today's show. Today's show has been brought to you by, and I want to reiterate this, DCTV, Decentralized Television. It's back, baby. It was down and out, but we are back. Thanks to Peter Saddington and the MetaFam crew. Check out the link in the chat. It's free. It's a YouTube channel. We go live now, 9 a.m. to 10 a.m. Eastern time. It's a great morning show that we're looking to continue to build, and I'm super pumped about it. So go check it out. We'd love to have you guys in there tomorrow. If you are on your way into work or you just need something to listen to for an hour in the morning, you want more of your boy, go check it out. Click the link in the description, subscribe, hit that notification bell, and tune in to us at 9 a.m. to 10 a.m. Eastern time tomorrow. Really looking forward to it. I'm pumped for what we have in store for that show. Oh my goodness, we got a lot here. Okay, so first one, shit or legit on Bed Bath & Beyond. Didn't Ryan Cohen buy a shit ton of this or something like that? I thought I saw that. Oh my God. Yeah, look, this thing was up 30% today. This is apparently GameStop 2.0. So you can see it's up. It closed up 29% today. Man, I don't know what to say about this thing. This is trading for a loss. I mean, they're obviously potentially going bankrupt here. It's like, I don't understand the Wall Street Bets crowd. And I don't know. I guess I really don't understand Ryan Cohen either. But did you not learn your lesson from GameStop, or did you not learn your lesson from AMC? I don't know. AMC has gotten absolutely crushed. And I'm sure there's some apes in here, and that's fine. But you can't tell me that this stock is going to 100K. It just ain't. And I don't think it's gone back to 72 for that matter. I told people to be careful when it's at 72. I got absolutely chastised by a lot of audience members out there. A lot of the apes that just thought I was the worst thing when I just simply told them to be careful. And so I think the same thing's going to happen with Bed Bath & Beyond. I just don't see the allure here. They're potentially going out of business, bankrupt people. There's nothing about this that I actually want to get myself into. I can bring up a couple other things about Bed Bath & Beyond. Super risky, obviously. If you did learn your lesson and you're just playing the hype, know when to take your money and run. Okay? You sell the highs, buy the lows. That's how it works in the stock market. That's how you win. Don't buy high and sell low. Okay? So if you bought Bed Bath & Beyond down the lows at $4.38 and now you're up 400%, congrats. You killed it. You won. Take your money and run. That would be my thoughts. If it were me, if I was owning Bed Bath & Beyond, this is what I would do. Doesn't mean that you have to. That being said, the bottom line is that Bed Bath & Beyond is shit. I went on a little bit of a tangent, but I felt like it was worth talking about because it has been all the rage lately. GMS, Z-Writer brings into the fold. Let's take a look at GMS. So this stock is, interesting move here, up above the 200-day moving average, and actually came back to test the 200-day and is looking pretty damn good. This stock is trading at 7 times next year's earnings, so not expensive by any stretch of the imagination. What do they do? So GMS is a, whoops, I had it. Hold on. GMS is, oh crap. Hold please. Put the wrong ticker in. I was like, oh man, I was really on a roll. But they are a company that, let's see here. It is jacking me up here. Hold on one second. Pulling up GMS and give you guys a rundown on exactly what they do. Because to be honest with you, I'm not all that familiar with the company. Let's see what we got for GMS. They distribute wallboard ceilings and steel framing and complementary construction products in the U.S. and Canada. The company offers ceiling products, including suspending mineral fibers, soft fibers, all that good stuff. Okay, so now we're back on track. Sorry about that. So that's they're in the industrials sector. We can see that they've actually looks as if the stock's actually broken trend here. Let's draw a trend line here from the top at $61.79. We see a clear breakout. And as I'd mentioned earlier, a 200-day moving average break and actually retest before the next move back up. This is in breakout mode. Z-Writer, I think this is legit, bro. You know, without knowing the company all that well, obviously it took me a minute to kind of get my bearings on that one. But the chart looks pretty damn good. The industrials are making a pretty decent surge. The momentum is certainly there. So in the short term, at least, short to intermediate term, I would say that this is legit, bro. Have at it. SOL on SAVA. Let's see this one. SAVA closed the day at $20.21. This is trading at, looks like they're operating for a loss. Let me look at the market caps at 810 million. So pretty tiny stock, pretty tiny company. Cassava Sciences. Let's take a look at this one here. SAVA. This is a company that is a clinical stage biotechnology company that develops drugs for neurodegenerative diseases. Its lead therapeutic product candidate is simulfilm. None of these I can ever pronounce. It's a small molecule drug which completed its phase 2B clinical trials. Here's the thing that I don't like about stocks like this. It doesn't look like to me that Sava is actually profitable. Actually, it does. The fact is that it's not profitable, which means that the only way that they're actually raising money right now is through dilution. And you can see that plain as day. So this is going to be shit for now until they actually start to get a decent move on. The stock is up, though, 7% and actually continuing to climb here after hours. What is going on here? Do they have earnings or something? What's going on? Did I just catch this at the right time as we were talking about this? Are you kidding me? I'm looking it up on Twitter now. See if we got any Twitter news. Sava. Apparently, there's some huge insider buying on this one. Oh, yeah, here you go. Oh, my gosh. Well, it might be continuing to move up. It's now up 11%. Oh, my God. This is crazy timing. Robert Stanford bought $2 million worth of shares, 100,000 units at $20.69, increasing direct ownership by 11%. That's why the stock's moving up on Sava. I still say that this is probably shit, but wow, what a move. Let's go back to the 5-minute here. Big giant ass boner candle. Stock's now up 20% after hours. Froggy, bro. What timing, man? That was crazy, bro. That was crazy. Let's see. Don says that's me. It tells me to buy all of it. I gotta say it's still shit at the end of the day, but this is unbelievable. Now it's up over 21%. That is. I don't know if that's ever happened where I've had a shit or legit stock that just went off. That's crazy. Wow. Now it's up 25% after hours. This is still moving. That is unbelievable. All right. Restoration Hardware is we're going to come back to Sava because that is crazy. Restoration Hardware has been in a tough spot. We saw demand get destroyed a lot, I should say. And the CEO comes out, talks about recession 2 quarters in a row. But the stock is actually starting to move up now. Came down to $200 a share, and then has had a hell of a bounce all the way up to $329. $744 highs is what we saw out of this one. This has a forward PE of 14 times next year's earnings and a market cap of $8.13 billion. I actually like the stock. It's legit. I don't think Restoration Hardware is going anywhere. And that's really all I got to say about that. I love the company, even though I think the CEO is a little bit cuckoo, but I think Restoration Hardware is going to be just fine. We always talk about the rich staying richer. They're going to buy their $15,000 couches. Make no mistake about that. Okay. And their $20,000 dining room table. Don't worry about it. I think Restoration Hardware is going to be just fine. We're going to look at a couple more. I see a couple of requests for Sundial. And it's interesting that you bring this up. We actually talked about the cannabis industry this morning with Tamp, one of our DCTV hosts. And I had mentioned that the big problem with a lot of these companies is that they have no federal funding. So in order to raise more capital, most of these companies have to dilute the fuck out of their stocks. And Sundial is a huge dilution maker. This one, Aurora Cannabis, Tilray, and even to a certain extent, Canopy Growth, they dilute like crazy. And not only that, but they dilute to the point to where they almost get delisted and then throw out a reverse split on your ass and then repeat the process all over again. I understand why they have to do it, but this doesn't mean that it's investable. And I don't think that Sundial, in my opinion, is investable. Trade it, fine. Make your money and roll out. But I just don't think that this is something that's worth investing in. And I feel like I understand why some of these people are bringing it up. If you guys didn't catch the news, there's actually now 6 states that have cannabis legalization on their ballots. I don't think this does anything for these stocks, to be honest with you. We could see a little bit of a pop, but at the end of the day, I don't think we see much of a move at all on some of these, because all they're going to do is take the opportunity to continue to dump shares onto the investor, which is really shitty. It happens. So trust me, I've seen it time and time again. I would be shocked if they didn't just start diluting right out the gate. That's going to do it for me, guys. Thanks so much for tuning in. I appreciate each and every one of you. And again, make sure you check out the link in the chat. I'll be live tomorrow over at our DCTV channel, Decentralized TV. We're reviving it. We're bringing it back, baby. So make sure you go check that out. We'll be live tomorrow at 9 a.m. to 10 a.m. Eastern time. And then we'll be back here on Only Chaos at 3:45 p.m. Eastern time as well. We're going to be reacting to all of the stocks that I had mentioned earlier. And then I believe we have a couple of them that are going to be reporting tomorrow afternoon too. So make sure that you're staying tuned to that. I'm going to, let me come back here. I want to just make sure that I got this clear on who's reporting tomorrow. Pulling it up on my, hold on one second. Anybody got these? Anybody got one of these? Just opened up my phone. Just did it. All you iPhone people are going to be like, oh my God. So we have Cisco tomorrow afternoon, as well as Synopsys, Keysight, America's Car Mart, a couple other small ones, but primarily we're going to react to what happened with Target, Zim, Lowe's, Krispy Kreme, of course, TJX, and then we'll have Cisco. That's the big dog that reports tomorrow. Bath and Body Works, also reports tomorrow afternoon. So we'll react to those as well. Thanks so much for tuning in, guys, and I'll catch you all tomorrow. See you on DCTV and see you back here. Bye.